Welcome back to Vyapaar Jagat TV. And here we are having a session of startups struggling for finance. This is one of the major problem why most startup fails. Struggling for finance is not just at the edge of starting a business or in the middle of the business. It is all about rotating the finance. It is all about managing the finance. What more can you think over finances? Who can better moderate this session of startups struggling for finances? Let's have Mr. Arup Achari with us to moderate this entire session. But before that, let me tell you, Dr. Arup Achari has started his journey from a design engineer to a lead consultant by building teams of Indian manufacturers. He is a multilingual YouTuber and social entrepreneur who believes that if farmers and small business owners undergoes international trainings, will surely excel and it will positively affect our country GDP growth. So here's your very own, ours very own, Mr. Arup Achari. Please welcome, sir. Please welcome on this board. We heartily welcome you here.
Thank you so much. Thank you so much. So, all right. I'm very excited. First of all, thank you for conducting this session and inviting all those great people. So, I'm really expecting that there must be some fruitful thing that we can take out and take out for the audience as well. So, I want to keep this conversation very simple and open so that we can bring out more things instead of way more professional because प्रोफेशनल में कोई कई चीज मार खा जाता है. So obviously we audience is our main focus for this conversation. So we also have three panelists and three great people. I would like to introduce them first. Let's introduce Dr. Mammoth. She is a founder director of mycoolguru.com and W Chocolates, and she is a versatile marketing trainer and motivational speaker. Dr. Datta has more than 20 years of experience in corporates like Standard Chartered, HDFC Bank, etc., and academic institutions like Jadavpur University, Kolkata University, ISBNM, EIILM, United World School of Business, so etc. So she completed her graduation in economics and MBM in marketing management from University of Kolkata. She has done her PhD in retail marketing management and has published several research papers in journals and conferences. She has received best paper awards from several institutions, including IIT Kharagpur, IIM Ahmedabad. She has been corporate trainer for more than 15 years now and has trained senior management employees of several public and private sector organizations in the area of marketing and digital marketing, with special focus on customer behavior and content strategy. She is an active member of Bengal Business Council, involved in organizing various corporate events. She is an avid traveler and loves meeting people. Thank you so much for joining us, Dr. Mohadata.
Thank you. Thank you for such a hearty welcome.
Thank you. I would like to introduce our next panelist, Mr. Raj Sukheja, CXO Red Mammoth Venture LLP Mumbai. He's a specialist in rising capital and business strategy with over 35 years of experience, both in India and international. He consults worldwide on the above subjects. He is an author of 3 published books on the business and spirituality available on Amazon, Kindle, and other platforms. He is a member, serial entrepreneur, and a global author writing for various public magazines and auditoriums. Thank you so much for joining us, Mr. Raj Sukla. And we'd like to read those 3 books. Especially, I'm very much interested.
It would be my pleasure.
I'd like to introduce our next panelist, Mr. Pratik Ghoda, who is a chartered accountant by qualification since 2006 and having huge experience and expertise in finance domain, starting as management trainee till CFO and vice president role by serving companies like Torrent Pharmaceutical, Cadila Pharmaceutical, Motif Incorporation, Jandu Pharmaceutical, Sterlite Technology, and Otsuka Pharmaceutical, and lastly with Baxter Pharmaceutical US MNC as VP Asia Pacific. He was youngest financial controller for Cadila International Business Unit at the age of 25 in company's history. He is a mentor of startups and tax academic course for Ahmedabad University in entrepreneurship. To pursue his dream, he finally managed to quit the corporate world in 2019 and came up with the startup name Best Private Limited in August 2020 for healthy lifestyle. Thank you, all three of you, to join us in this session. Uh, we would love to come up with few questions, and we'll discuss about those questions, and we'll keep this conversation very simple and obviously the audience specific. I would like to start with Dr. Mammoth. Ma'am, why do you think entrepreneurs fail to get funding?
A very short and sweet question, but a very heavy question. Why is it that entrepreneurs, startups, they cannot manage to get funds? Why do they struggle for funds? Why can't they get funds? I'll tell it from investors' point of view because I have been hearing it very openly from them. If I may put it in a very informal way, I have heard a lot of investors speak when it comes to funding, but there was one investor who made it very clear. In a very short sentence, he said, जब हम 10% देंगे, तो 40% return भी लेंगे. And this one small phrase actually intrigued me into asking him further that you know exactly what you are looking for, what is it that we have to do to get funds, and many such things. So what I understand is that as a startup founder, I also feel that even I am a victim of the same problem, that we get too obsessed with our idea. Each of us, we feel that we are doing a great job. It's a fantastic idea. It is there to solve every problem. We are definitely here to do good. And we focus too much on the idea while we are talking to the investors or while we are looking for the investors. Whereas when the investors are listening to us, their focus is on the ROI of their investment. They are trying to figure out or hear certain keywords or certain data or certain facts of your business, which will give them an indication that if I invest my money here, I'll get some return out of it. So we are in a wavelength or in a mindset of conveying how big or how good a job we are doing. And they are in a mindset to understand whether our work will give them return or not. So this merging doesn't happen, this matching doesn't happen. And what a lot of such investment pitches and all, what it teaches us is, if we can make our proposal very short and crisp and tell the investor why they should invest in us, that is when we will start getting fund. Because the investor is not there to do charity for us, right? We might be thinking that we are doing a great job, but they are not doing charity. So until and unless we make our startup operational, we start earning some revenue, we show that our model is workable and scalable, we show that there is a good accessible market, we can show that we can capture that accessible market, and we can talk to them in terms of certain data, figure, and financial projection, we are not going to get funds. Let's be very open about it. Let's accept that it's a business for them also. So I feel that we fail to get funds because we fail to become rational and business oriented. This is my personal take on the thing.
That's great. Mr. Raj, can you put on some light on this topic as well?
Sure. I've been a serial entrepreneur and an investor, and have been a practitioner for raising capital since the past 35 plus years. And over the course of my journey, ROI is not the only thing that I look for or my investors look for. There are specific industries that you are focused towards. Every investor has an appetite for a certain industry. Somebody is interested in putting money in pharma. Somebody likes to put money in vehicles. Somebody would like manufacturing. Somebody would like technology. So there are so many aspects that you're looking at in terms of investments. And every investor has a specific taste that मैं इसमें ही पैसा डालूंगा. So it is also necessary for entrepreneurs, beyond which Dr. Mahua said, that ROI is one part of it. But the other aspect is, are you going to the right investor when you're pitching, who has the appetite for your business? Moreover, that being said, then the concept of whether it's a idea or it's a concept, or there is a POC done, that's proof of concept has been done, whether the borrower or the person who's pitching for money, the startup, is actually converted that idea into a business and has run it and now can show traction. Can I do business? Have I sustained 2 years of my business idea and has it grown? Is there traction to the business? Am I seeing customers wanting to, there is a gap in the customer requirement and I'm able to fulfill that? That is also one very important aspect where it comes to raising startup capital. Because agar demand hi nahi hai, to aap kya bechoge? Some ideas are way before time. Some ideas have lost their traction completely because they're no longer relevant. So in either way, you will not get investors as easily as you should. Although it's not an easy task to get investors anyway. And the last and foremost thing, I think, is the attitude that the one person carries, which Dr. Mahua rightly put up. Everybody believes my idea is wow. I've got $1 billion idea. But no one understands that we hear ideas every day. Hundreds of people come and pitch to us on a different scale. And typically at the end of the day, we know that 99.9% of the idea is not going to work because either the confidence is not there, or the delivery capability is not there, or the experience is not there, or the understanding of the business is not there at all. I mean, it's just an idea in his mind, and he or she, whoever is that pitching the deal, is actually just pitching what's in their mind in terms of raising capital and thinks that they can do it. But thinking and doing is two different things.
Exactly. So, Mr. Raj has made a really great point. Like, even I have seen in Shark Tank India, there was even in Shark Tank India, there are few entrepreneurs, they come to pitch in and trying to get funded, but they unable to get the fund because they have the really great business and they have the great product. But since the investor, he or she is not very used to that expertise, so he don't have much idea about the business. So they usually don't invest in that business. So understanding the business is very crucial, and as you rightly said, making things and making plan and doing the actual thing is very different. Thank you so much for valid point. And
Most
Mr.
welcome.
Pratik, can you have some light on the topic as well?
Sure. So I think a lot of basic things that has been covered by both the fellow speakers. And what I firmly believe, being into the both the sides, earlier on the financial sides, being on the startup side, that specific is terrific. So there is a lot of buzz in the social media nowadays. Valuation, about the startups, and a lot of fundraising, Series A, Series B. It keeps people keep coming with the ideas in the startup. Okay, but that's the brighter side, or the outcome that they are seeing and coming up with the ideas in startup. But in the end, what really goes behind it. So from idea to making the entire channel, your idea is marketable, generating revenues, you have a traction, and all these are the factors which ultimately making investor to make sure that okay, one is really interested in going for a funding. So you have to be one startup per se. You have to be very much specific, which should be terrific, and you have to make sure that you are really convincing your idea by communicating in a particular manner, short and script. Need not to be a storyteller at all. You have to be very much firm with your idea and the numbers and the entire channel, which will really appeal the investor. Or what additional thing, like even if that need not to be innovative every time, even if there is a thing which you are doing, but in a different way that also comes in a very much kind of a unique idea. So you have to make sure if there is an unstructured field, you are taking it up, presenting in a structured manner, which will really, opening up door for the businesses. That is a very much critical. So how you are pitching your field to the investors, that is making a lot of buzz about the promoter's confidence and the background that which is coming from understanding of the field. Even if there is a possibility that, there are specific investor for a specific segment, but if really something innovative that you are coming up with that may appeal someone to, come up that, okay, let me go try to do something different with this field because this has a potential. So it's very much important to build the specific, ideology for your idea, how it is becoming a business and you are taking to a particular level. Because that's a very much first instinct that will hit the investor to think about it. If he's not at all ready to think about that idea itself in the first couple of minutes, that's why I always believe that the elevator speech is a very much important. How you have to be ready with the 30-second or 60-second stuff, which will really make it appeal. And that's how you are able to appeal. Otherwise, there is chances that you are, going to fail for the fundraising kind of stuff.
That's a really valid point that you have made. So adding to those points, I would like to add few more points to the audience. The person who actually want to have an idea and needing for the to get funded, so they should try at least on themselves. Like they can start a product or anything instead of going to the investor first. They should try up those products in the market. So like we can try the market test, maybe manufacturing, or it may be a software product. So they can try it first. If that runs, if the market is loves it, and if the market is requiring that product more and more to expand the business, if they don't have enough fund, then they should go for the investors. I think that is the right approach for any small entrepreneurs, because everybody is like doing the bootstrap or something like that. So we can consider that as well. So whenever you have an idea for the audience, then you can always go for the first product for yourself. Then you try it, then try your surrounding market, then narrow down the market where your product is on demand. If the market is require your product and they get value from your product, then go for the investor, and you can obviously go for the funding. So yeah, I would like to go to our next question to Dr. Mahua. Why do you think, and what are the do's and don'ts for entrepreneurs looking to get funded?
Okay. Let's divide it into two parts: the do's and the don'ts. Now, if you look at the do's part of it, the first thing that an entrepreneur should do is to start a business. Okay. Without doing anything, any investment, or without just at an ideation stage, if you are looking for funding, then you have to approach somebody whom you know, maybe your family member or your friends or someone whom you know. However, if you wish to go to a stranger whose trust you need to gain, you have to invest yourself first and start a business. That's the first do. Okay, that do it first. Invest your money. Like, as we say, get your hands dirty first. Second thing that you have to do is be very sure about exactly what customer problem are you solving. Many a times, what I have seen as a startup founder, when I go to a lot of these meetings and everything, I'm not saying I'm 100% foolproof or something, but yeah, I also learn from my mistake. I learn from others' mistakes as well. So I keep hearing people talking about how good their product is, but they don't talk about what problem they are solving for the customers. Because from the marketing perspective, if your idea has to click, it has to help someone. If it doesn't help someone, if it doesn't seamlessly become a part of someone's life, then the idea has no value. And be very clear about the category, exactly what you are doing. Okay, as Mr. Raj very like 100% aptly said, that every investor will not be interested in every category. People have fund. That doesn't mean they will put it anywhere and everywhere. It's exactly the same way. Like, there are hundreds of mutual funds. There are hundreds of insurance. There are hundreds of fixed deposits, but people have their preferences when they are investing. Same way, every investor has their preference, and that preference can even go up to other things like your education background or your past experiences or the location where you are doing the business, the category of product that you are making, the service that you are providing, the target audience that you are aiming for. There are a lot of parameters that the investors will be seeing. So be very clear on every point and be prepared to answer every question. And when it comes to don'ts, what I feel personally, like if I take my example, I have started chocolates business very recently after a few years of product development, market testing and all. May 2022, we launched it commercially. In last 8 months, I have already achieved my break even. Now, since I have achieved my break even, I should be very happy, party, and go to an investor that, I've done my break even, so please come and join. But no, that is something I'm not supposed to do, not get elated because in 8 months I have got a break even. The reason is in last 8 months, my investments have also been low. So what we have to do is to scale up on our own a little bit and see whether we are able to take little bit bigger risks or not, to understand whether the business is scalable or not. If yes, then go to the investor. So the don't is, it's not like I have invested 1,000 rupees and I've got back 2,000 rupees. So yes, my idea is okay. So go to an investor. No, never. Because that could be a fluke as well. That could be ladies' luck as well. That could be a one sudden, good luck that you did it. In fact, if you look at a trading, somebody buys a product at 10 rupees and sells at 12 rupees. He also achieves a break even, or she also achieves a break even, but that doesn't mean the idea is brilliant and yeah, it's investable. So the don't part is never get satisfied that yes, I've done a big job and go to an investor. Go to an investor the day you are confident that you would have put in 1 crore rupees or whatever if you had that money. Then only go and ask an investor to put in 1 crore when you know you would have put in your hard-earned. So the day you have that confidence, the day you have your data, then only go to an investor. So that's how I put my do's and don'ts as a startup firm.
That's great. That's really great. Rasa, can you share your thoughts on it, please?
Well, as Dr. Moa well said, problem solving, scalability, starting the business rather than just being an outside ideator and expecting funds to walk to you. It's not going to happen. It's very difficult. So unless you start the business, get your feet wet, you're not going to get money, easily at least, unless they are from your family or some of your friends or colleagues who have faith in you. Okay, yes, this guy will do it, or this person will do it. But having said that, I think one of the most important things that you need to do is have a clear idea of what your business is, which is translated by a vision or a mission statement, which we all know is a very fundamental thing that we need to do for every business. More than that, after that is a business plan. You need to put a business plan in place. I consult for large corporations. I consult for mid-size. I consult for startups. I've done mentoring. We've done hundreds of businesses in my lifetime. But the fact of the matter is, I do not even know 2% or 3% of the people who are actually have a solid fundamental plan with them, and they're walking on that path and tweaking it as they go along. It's not a rigid plan. No business plan is ever rigid. So you have to tweak it. Exactly. Google started as a software company, if I'm not mistaken. It went into search engine. The search engine was never the goal of Google. And it became the largest company doing data analysis or data analytics in our lifetime, probably seen. Now, GPT is a new AI that's coming and challenging Google. A completely revolutionary new technology. So evolution is part of the game. And you have to adapt, one. So no idea is perfect in itself. One thing you need to understand is whether you want to make money or you want to create a great revolutionary idea and launch it to the market. Your ego tells you, no, my idea, wow. But an entrepreneur needs to make money to sustain. Ideas die. So I suggest, if you don't have a great idea and if you're not confident about it, copy someone. There are plenty of people walking the path who are successful. Copy, take your steps, then adapt, and then evolve, go beyond them. And that's probably one of the ways you can escape a lot of mistakes that you would be ending up making, creating a new idea. But if you have the courage and you have the will and you have the ability, the skill set, then by all means, take your idea and go with it, run with it. So it requires a very strong mindset to be an entrepreneur. And you need to really understand what your goals are. Is it just making money, or is it going beyond money? It's service, it's quality, it's scalability, it's growth, it's evolution. So these questions need to be definitely answered. And every entrepreneur should incorporate these values or goals in their business plan, their vision, their mission, and whatever else is required to bring them to a focus. I think that's about what I can say.
Yeah, Raj sir, I have a question for you, Mr. Sukheja.
Yes, please tell me.
Yeah, I have actually known about this red mammoth, and you are one of the CXO there.
Mhm.
And I heard like there is a complete solution. It's a complete solution giver to the startup or any person who has an idea, and it supports in all the other areas of moving forward, like SME funding, and then the business research team. There's a you are into taxing and accounting and all the complete project. So basically I assume like you actually are the expert of the startups financing and the process of the startup financing and all. What
Yes.
would be apart from the basically the mindset of the entrepreneur, because obviously you are right, if you don't have the mindset you are not going to move further. So with that strong determination and that strong mindset, what would, if an individual who comes up and seek an advice from you with one of
Mhm.
his revolutionary or maybe profitable idea for starting up the business, one piece of advice as per your expertise and experience would you give?
So you are asking me that if an entrepreneur comes to me and says, "Okay, I have a great idea and this is my idea, what do I do?" Is that what you're saying? That's the
Yeah, one
question?
piece of because you see, for example, I come to you, I say I just have an idea, I want to move it, I want to, I want to recreate a business out of it.
Mm-hmm.
So with that one idea, suppose coming up with a software development, they have some because this is like IT technology kind of a period with an era which we are moving here. If I come up with an idea, like I have a software this thing with me, I have the algorithm all done with me. Now how do I move forward? Because there must be a lot of naive people who don't know how to move forward with the ideas also.
Okay.
And those viewers who are watching this videos especially will need your expertise and your experience advice on such matters, because a lot of people have those ideas but they are not able to move further with they stuck up somewhere.
Right. So the question would be, I would rather have questions rather than advice.
Okay.
First, whether you have a product which can be marketed. Is there a
Right.
demand you feel in the market?
Right.
Can you scale it? Like Dr. Mawla said, are you able to fund it? Do you
Right.
have the money? If you don't have any of this or any of those, what gaps do you need to fulfill?
Right.
Jot them down. Put
Right.
those gaps in place, fulfill those gaps, and then go out to the market. If you have a yes to all, and if you don't have a yes to all, come to us, we'll help you find the yes.
That's what I wanted to hear from you.
Yeah.
Yeah. That's a really very wonderful advice, a piece of advice, not advice, but a piece of advice disguised in questions. A question disguised in advice you have given to our viewers here. And I would like to even ask the moderator, Mr. Arup Achar, to please move on with your other discussions. And sorry to interrupt you as a ghost here.
Thank you, Ms. Lara. Thank you.
Thank you.
Absolutely fine. That's absolutely fine. Mr. Pratik, can you also share your viewpoints specifically on do's and don'ts to get funded for the entrepreneur?
Yeah. So I think as a do's, first of all, you know your business very well. I mean, just know your business and the scalability, what value addition that you are going to propose, even if it's a me too product sort of thing. You have to be very sure that what kind of value addition that you are coming up with. That's a very important thing to highlight. That and that's the area probably which will you take up a step ahead. So knowing your paths with the scalability and what kind of a value addition you are bringing it into the business, that's very much important. You have to very much true to the thing. Second thing, you should have a really good think tank or a team. That's very much important. One of the aspect when it comes to a co-founder management or a team's aspect. Normally, if you have a technical guy who is taking up a startup, who should be your co-founder? Be it a kind of a financial guy, a marketing guy. So selecting of a team and a co-founder management is a very, very much important, because that's the next criteria that any investor is going to look into it. That okay, one is the technically sound guy, who is the other guy coming as a co-founder? He is a financial expert, a market domain expert, which will make sure that okay, there is not just an idea, but the selection of a team is in a manner which is making sure that this business or a product or a service is going to take off. That's a very much important aspect of building a team of a founders and the co-founders, which will give a good amount of confidence to the investor to make sure that this startup is really going to be on a serious note. And when it comes to a strictly don't make a very much kind of a rosy business plan, unrealistic business plan, which is the majority of the startups are coming up with in order to making a valuation like a higher and dilution of a lesser amount of equity. You have to be very much conservative. Rather, if you really have a faith in your startup and idea, as I think Mr. Raj has rightly said, go for money or go for building a startup. Then don't crave for that much dilution of equity if you have really solid idea, being a realistic kind of a numbers, solid business plan, and take a help of an expert, because one thing is very sure that you are not the expert of everything. So you have to make sure that at a particular proper timeline you have to go with the expert of that particular field, so that your plan becomes very much robust. So don't go for a rosy picture at all. Make a conservative and a straightforward business plan which is a digestible comparative to the marketable scenario and the capabilities that you have along with your team. So go with the straightforward thing and specific. Don't too much of storytelling, nothing like it. Just hit on the your idea, your things that you are going to plan, your business journey, and be very crisp so that it will make impact. So you need to be really careful that in a minimum amount of time you have a maximum impact. And you have to go for a BSc theory, what we call an entrepreneur journey, that's blood, sweat, and tear. I mean, without that, following that theory, nothing is going to happen. So that is what really, in a very limited timeline, I would say that do's and don'ts one as an entrepreneur has to take care of.
Thank you so much. That you made a really valid point, and I want to add a point on this topic, because mostly the new entrepreneurs, they think मतलब हम कोई startup खोलेंगे, एकदम शानदार office होगा, this and that, and we will have this red carpet, and we'll employ, and we'll keep on hiring people. So I want to make things very clear to the audience. If the entrepreneur really have an idea and he have the expertise himself, then he can always try up a sample A, sample B, sample C kind of product. As I earlier said, they can always go for market research. I would suggest them to read lot of books, but they can always, as you said, they can go for any expertise or mentor. So that will be really helpful, and it will help them to to avoid mistakes. So my next question to Mr. Raj, is always a plan B necessary in an entrepreneur's journey?
Absolutely. But I believe the plan B should only be exercised when you have no option left. So it's not an excuse to fail. It's an excuse to exit or probably survive. And that has to be taken under careful consideration what you intend to do. Because in every entrepreneur's life, however good, bad, ugly the situation is, you always have to be prepared for a plan B in terms of at least how to minimize your losses, how to get out, and to realize before that, okay, my idea is not working. I have failed somehow. I am not able to focus because the product is not good or the service is not good, or we are way ahead of time, way ahead. I mean, there have been instances in my life when I've started a product. Like I tell you, about 20 years ago, we started a shampoo company. We introduced a brand called Tresse. It was a cosmetic milk shampoo, but the market was not ready for a milk shampoo. No one even understood. They laughed at me and said, "Hey, milk ko sar pe kaun dalega?" So at the end of the day, we realized we were way ahead of time. Now you see milk shampoos, you see activated charcoal, you see so many other stuff coming up. And these are all products which are acceptable in the market. In fact, they are paid premiums for. So this happened 20 years ago. So if you're ahead of time is also a problem. If you're behind the time is also a problem. The timing is everything in business. And a plan B helps you to actually curtail your losses. It keeps you in sync with bootstrapping, which you just mentioned. You don't splurge. You bootstrap, you grow, you look at scaling like Dr. Mahua said, like Mr. Pratik said, and slow and steady, you consolidate your effort, you build a foundation, and now you know, yeah, this is working. I'm getting returns. I'm getting a reputation. And once you see that, then you start scaling. Then you start looking at equity. You start looking at equity, you become conservative. That is a very good point by Mr. Ghoda. He said, be conservative. Don't be, expansive. Ke meko sara equity de dena hai, aaj hi paisa chahiye. Try to get as dilute as little as possible, get maximum, build premiums, and slowly keep expanding and growing your business. And then finally look at the big goal, which could be an IPO, it could be a venture capital, it could be whatever.
Thank you so much. Thank you so much. Dr. Moa, can you put some light on this?
Yes, from personal experience, even I would definitely say plan B is a must. Plan B has to be there. However, let's not confuse it with pivoting. Okay. In case you are running a business, you're doing a startup, and at certain stage you realize that there are certain things which are not working and that you need to pivot your plan, that's not plan B. Okay, that's pivot, which means you are probably tweaking it. You're probably taking it to maybe a slightly different angle, or maybe you are doing it in a slightly different way, or it could be a pivoting, operational pivoting, it could be a process pivoting, it could be even a product pivoting, it could be target market, whichever way you want to. However, a plan B is must, because if nothing else works, then only you have to fall to plan B. Okay. And a mistake that sometimes we make is that we have a plan B, so it's okay to fail. Now, that's dangerous. If that is the mindset, then plan B is a dangerous thing to have. So having a plan B means you will not, absolutely your life will not fall apart. So you, even if you fall down, you will get up. That is what plan B is all about. But your agenda is not to fall. Your agenda is not to use the plan B. The agenda is to make plan A successful. Like, let's put it this way. A few years back, when I tried for mobile food vans, there were certain laws in the RTO in West Bengal, in my city, Kolkata, where there was no mention of what should be the rules and regulations for a food van. This I was aware of. So whatever other paperworks were needed, I did. But what I could not anticipate, my mistake, as I always share this with every startup founder, as I always say, that one big mistake which I did was my lack of 100% macro environmental study, which is the hawker and the trade unions. I completely did not understand that what will be their repercussion if I start a food business in their area where they are already doing the business. Okay. And in 6 months' time, I actually had to fall back on plan B, which was to sell the vehicle and go back to job. I had to do that. Okay. My plan B was to get back to job fully, sell off the van, and I had to do because of my own mistake. I could not anticipate the move that the trade union, the hawker union would be doing. Okay. And like, in fact, I was kidnapped by one of the union members and I was kept locked in a room for 12 till 12 o'clock in the midnight. And a lot of things happened, which was beyond my imagination. I got some political pressures as well, which was beyond my imagination. I thought uh, my local political leaders and all that will be of supporting to me. But no, there was opposition. So it was my mistake. So then I fell onto plan B because I had nothing else to do. Okay. But of course, plan B is not an excuse for me to fail. Right. So that's why, how I put it, that plan B is must because you have to live, you have to survive. But plan B is not an excuse to not execute plan A and give your 100% effort.
That's right. Looks like
Yeah,
you have gone through really hard time and cracked the code.
yeah.
And Mr. Pratik, can you have some light on this? Sorry, Jalpan, can you are you saying something?
Yes, Arup, we are running again short of time, so we have another 5 to 7 minutes
Okay.
to have this session.
All
I'm
right,
sorry
all right.
for very interesting session, and I have to cut you down this way. I'm really sorry for that.
No problem, no problem. So do you want me to ask my last question or
Yes, obviously, you can
okay?
continue with your last question.
Okay, so my question is to Mr. Pratik. What are the sources of finance that an entrepreneur can expect?
So it's as we did discuss, it's always been a first, kind of internal and external that source of finance macro level. You can, always look into that. Internal, you can have your savings, you can have fundings from your friends, family. If you have good credentials, probably, kind of a small borrowings from the banks and all. That is a kind of a source of, basic finance that you can plan for when the entrepreneur is starting a journey, because, the bootstrapping is always been a preferred stuff when you are going for expansion or any other source of funding later on. So also a very innovatively, it might be easy for me to think about, but what kind of additional source of revenue that you can generate from your internal business itself, kind of a diversification. So my startup has been looked as a honey, bottled honey product. But when I say that my diversification will allow me to work on the beeswax, bees pollen, royal jelly, and the bee venom, and I'm emerging as a pollination contractor, that's a kind of a completely different diversification. So what additional, kind of a support system from your own business you are able to bring as an internal source of financing? That's a very critical element when, one is choosing the field for, his or her own startup, which will, kind of keep generating a small amount of internal sources of finance. Of course, external is always there when you're going on a large scale borrowing, but you need a lot of maybe collateral based financing. There are CGT MSC based financing from the bankers, but not always easy to crack. And ultimately, when you're going for a fundraising, angel investment, or kind of a seed funding, that's what it takes. What we did discuss, a lot of blood, sweat, and tears that it took. So you have to manage first of all from the internal source of financing, which comes from all these ABC things, and then one element which is a kind of a kind of your diversification, which will make sure that you're not depend on one kind of a service or a product, which will allow you to keep going, and at the same time then you explore the source of external financing, which may be a high level of bank borrowing, commercial papers, the investors, and so on and so forth. So that's, I think, internal and external source of financing, which one can really bifurcate very clearly and can thought about.
Okay, okay. Thank you so much for those valid points. Mr. Raj, do you want to add something on it?
Yes, as Mr. Pratik said, internal sources of financing are really an option. And but the thing is, those things could happen only once you are a little mature. So you have traction, you have business, you have customers, maybe not as many as you require. Then you can probably, look at a ploy where you can deviate from the main focus and get other angles into play. Like he mentioned, bee honey business, and you can do pollination contract or whatever else. But that would happen only if you have a business. For a startup, it's already a primary focus that you need to first establish what you need to do, because that's your goal, that's your business plan. So unless you are set up with the foundation, you really can't deviate and do something else along with it. So that becomes a conflict of interest, because your resources are limited, funds are limited, focus is limited. You have not understood your business or your customers as well. That's why you don't have customers, or you haven't reached out. So unless you reach out, experience, experiment, understand the customer requirements, or fill the supply demand gap, you can't go to the next level.
Exactly.
But it's a great idea. I mean, I've learned from this, so I'm going to use this now. Thank you, Pratik.
Thank you, sir.
Dr. Moha, will you be can you add some points on this if anything missed?
No, I think Pratik actually summed it up in a very interesting way. The points that he has mentioned, and even Mr. Raj's points, are absolutely interesting. So definitely, I would say that what we need is something very crisp, something very to the point, absolutely steps defined, and only then the investors will even look at you. So what I would absolutely say is that, documentation, having the numbers out there, having figures very clearly there at the tip of your tongue, having your information correct, having your market knowledge correct, having your competitive analysis correct, understanding your consumers correctly, every figure, every data, everything, if it's at the tip of your tongue, then there is no reason why an investor is not going to invest on you. If you know your game, if you know your business in and out, if you know your competition, if you know your weaknesses and you know your strength, if you know exactly how to enter the market, how to grow in the market, how to capture the customers, what is the reason that investor will not invest? They are also there to do business, right? So if your plan, your documentation, your data, your everything is correct, if everything is well set and prepared, investors are going to walk in. I think Mr. Raj will agree with me that if all things are set as per your requirement, if every parameter is taken care of, then why will you not invest?
Just one last point I would like to raise is, amongst all the other things that Dr. Mowa said, which are perfect, attitude, extremely important, extremely important. How you approach them, your confidence, your knowledge in your business, and the knowledge to be put forward to the investor that I know what I'm doing is extremely important, because that carries half the weight. If you have no confidence, you're not going to get money.
Absolutely.
Amazing. So to conclude and consolidate all the points, maybe this will useful for the audience. So this will be the steps. Correct me if I'm wrong, all three of you. First, start the business, like internal resources. Since you are bootstrapping the business, so you don't have any idea like how this product is going to perform in the future. So first step will be like if you are a salaried or you're starting a small business, then get fund from the inside your home or family, something like that. And create a product for yourself. Then try it for the market test. If the market is needing it, back to back, then make as Dr. Moha said, make a year-on-year growth plan. So what is the percentage growth and what is your profit margin? So before going to the get for funding to the investor. So obviously investor is like for example, I'm investing in a stock market. So if I'm investing my money, then I will expect a kind of profit. So I don't care the business is how the founder is struggling, how the members are struggling. So this is before before going to the investor, we should do our homework, and all those questions answer we should get, make them ready. Then we should go for the investor. So as Mr. Raj told, the attitude is really important. The resilience is really important. So sometimes the product or something, the customer, we have to face the angry customer, we have to face the angry investors. So when we quit our job and to be an entrepreneur, then you should keep in mind that every person is your boss now. The customers, the investors, and your co-partners. So you got three bosses now. So considering all those points, entrepreneur is not so cool as it sounds, but we have to be very agile, and to be very flexible about the things. So that is what I learned from this topic. Correct me if I'm wrong.
Absolutely, Arup. Even we got lot of things to learn. And if in case we are missing any of these cases, we have our own Mr. Raj Sukheja, as he said that he is there to help us out. And turning this serious note into a small conclusion, I would like to say that before approaching any business or any entrepreneur ideas, we have to self-evaluate it. We have to we have to convince ourselves about the business idea, and then we can approach others. So that would be the better way of approaching to any business ideas. And then looking for the finances are again how the channels of financing. And this is how a person can be maintaining the proper resources of money in his business. So I heartily am grateful to all the guests here, to all the speakers here, who have actually put a lot of limelight over the minute things also here, as Dr. Datta told us about her business experiences, which she shared. Like she should had some collab with the vendors, and then she should have started. So we all make mistakes, but we have to learn from them, and then we have to rebound with that attitude, and overcome all our again overcome all the hurdles we stand in the businesses. Thank you so much. It was wonderful session. Thank you, Arup. Thank you, Pratik. Thank you, Dr. Datta. And thank you, Mr. Sukheja, for being with us and guiding us throughout the session. Thank you,
It's an
sir.
absolute pleasure. Thank you so much.
Thank you, everyone.
Thank
Pleasure
you.
to meet all of you, and thank you. God bless.